Alrighty, good morning, everybody. It is Tuesday, August 2nd, 2022. Let's go ahead and get right into it here. I'm going to look at yesterday, but yesterday it was really not much to note. It was pretty balanced and sideways. So I'll just go back and just show you some of the really nice reactions we got, and then we'll go into this morning. So coming out of the open, remember our advanced decline lines and nicey tick were at extreme negative levels when the market opened. I told you that, and I hit it short at 0850 here and was able to capture this 10-point sell-off. Had a few contracts on. You remember my third contract going for a little bit deeper into 95 down here and never got it. And then from there, we got a hold again off 07.5. This has been such a hot, I mean, all the levels have been really hot, but this 07.5 again, having a lot of trouble right off the 200 here, just a little bit after the open, and then it just started to rip higher. So if you zoom out a little bit to get a more perspective here, the thing started, we got right through 07.5. In fact, what happened was the market pushed through, pulled back, and then used 07.5 to the tick here and then started ripping higher, and then came pulled back right to the VWAP and bounced, and that was really the trade of the day. If you notice that we broke through the VWAP, there was some pretty good, actually the tick started to really show what was going to happen before it really did, because it started really ripping higher off of, I believe, the negative numbers going right towards zero, and pulled back, broke through the VWAP, pulled back, and went right off VWAP higher. Now, you guys remember I told you as the market was advancing higher, we had our OPL and the minor level here at 23 that I was interested in trying short to see if this was just kind of a fake out for lower, and sure enough, they continued to push. So I lost that trade, and then we came up and we failed what? 2 ticks in front of our major eye level again. That 41.42 has been a real sucker as well, a real move for the last day or two here. We've come up multiple times right into 42 and failed. And then on the pullback here, if you look at the leg from the low of the morning all the way to the high of the day, we pull back and bounce right off the 61.8 there, and then came up, and we do this all the time. The market, we have a really good level. Will even come into it and fail, it come above it, pull back and bounce off of it. And then every once in a while, what we'll get is a little peek through a major level, and they'll try to get through it, and then bam, get the rejection back lower. And the main thing I want to point at the end of the day here, or at least going into lunch, the market came back, retested VWAP, and bounced to the tick right off of it, and then failed off of the 200. So all this stuff is very important stuff to be aware of. If you're new to this trading system, and there's I think a few people in here who are, these are things I'm going back and showing you this not only to kind of toot our horns here about our levels, but to show you trade setups that work over and over again. So came up into the 200, failed, got a little peek through, and like I said, it wasn't really a huge noteworthy day, because it was, if you zoom out and look, was basically just up and down, chopping back and forth. But despite that, there were still some really nice setups, some really nice plays off our levels. And then you can see over here at the end of the day, we advanced right back up to the OPL and failed right off of it. In fact, we failed off of it multiple times. This just happened to be maybe the sexiest setup there. And then we pulled back, held 50% of the day before. And then we retested the OPL from the other side and bounced just a tick or two in front. And again, it was just very, very sideways. And then we closed out the day kind of balanced right there. And then we failed here coming into the open here this morning. So we're continuing to kind of pull back. And at the moment, actually, you can see here that the market is now breaking up through the 200 moving average, up through the VWAP, and seems to have a little bit of bullish cooperation here as I speak. So let's go ahead and jump into things here. I'm going to go up to my daily chart and we'll start dialing down. So looking at the high of yesterday, we still have, and I've been talking about this, as we advance higher here, compared to the last major highs that we made back at the beginning of June, end of May, we're pushing much higher in RVI, but price still has not breached those highs. And if you look up here, we're talking about right around 4,200. So we've got, I think that high there was like 4204.75, but right around that 4,200 area is going to be very important here, because once we can get through this high, we'll then negate any potential daily bearish divergences. And then if we look up at that weekly, remember what I said over here, we continue to get potential weekly bearish divergences as we push up to test that high of June. And so until we can actually get through that high up there, again, right around 4,200 and right around that major fib retracement level at 4221 there, we can make the argument for this bearish divergence. Once we breach through, that'll all be over with. So it's something that maybe we can't make a trade off of, but it's something that's giving us a higher time frame perspective on things. So just be aware the daily and the weekly will continue to show bearish divergence until they can breach through the high of June. And who knows? I don't think there's really much to celebrate going on in the world right now to expect some type of bullish breakout to come test the all-time highs. But you never know with this market. Back in 2020, considering how dire the world looked, the market just continued to push to all-time highs every day. So that's kind of my dividing line right there. 4,200, 4204.75, I believe, was the major high. Anyway, let's go back down here. So the daily has that bearish divergence once again from yesterday's high, still there. 4-hour had the agreement. In fact, look what happened here. Coming into yesterday, we talked about the bearish divergence from Friday. They pulled back and then bounced up and did, what is that formation that we talk about? The peak above and fail, right? So the market comes up, gets to a major resistance point right off of a major eye level, our 4142 area, gets a pullback, and then bam, gets a little peek through it by about 3, 4, 5 points, and then fails back lower. So that's our peak above and fail with a nice, beautiful 4-hour bearish divergence from the high of yesterday. And again, daily bearish divergence, hourly bearish divergence. So beautiful multiple time frame bearish signal from yesterday's high. Again, the question always becomes, even though we do have such a huge confluence, how far are they going to take things? Typically, when you have your daily, your 4-hour, and your hourly all in alignment, that's typically where you're going to get the beginning of a potentially gigantic move. And we're talking like 100, 200, 300 point moves. Sometimes they don't follow through, but you want to be aware of them, because when they do follow through, you're looking at some pretty hefty trades. So let's go ahead. Again, the 4-hour, the only reason I really want to come up here is just to point out that the 4-hour bearish signal agrees with the daily. And then the only other thing I want to mention here on the 4-hour is that as price pulls back from yesterday's high, we are starting to get a 4-hour bullish divergence from the low. So from the current candle that we're looking at here that will close about 30 minutes after the open, if this closes the way it looks right now, we'll have a 4-hour bullish signal from that low there from the overnight session that will come into alignment with the 60-minute bullish signal we got. That's an actual official signal, and the 30-minute and the 10-minute. So again, when you get huge confluences across 2, 3, 4 time frames, you cannot ignore those signals. This could lead to the next attempt to break out to the upside. And then again, the question becomes, are they going to have the strength to come back up here and actually do that? That's what we want to focus in on this morning, is what levels do we have above us that could potentially hold the bulls down? And then what levels do we have down below us as potential supports if the market does break down and break that multiple time frame signal from the overnight low and follow through with the higher time frame signal from yesterday's high for lower. So let's look at the levels coming into this morning. We've got just above us here, there is the overnight fib, which if you actually, what I should do is just go out and quickly look here at the 10-minute chart. I like to look at specific fib legs. I like kind of the bigger time frame higher time frame legs up. I'd like to look at the retracement from the high of the day before all the way down to whatever low we make if we're in this type of orientation of a pullback. And I also like to look at the overnight leg. So whether it's an overnight leg up or an overnight leg down, I like to look at the fib leg and see if those levels line up with anything interesting. And this morning here, we did come up, and I do want to point out, see if we can zoom in a little bit. We sold off from basically 50% of the day before in the overnight session. We came up and tagged it basically to the tick. I think it broke by 1 or 2 ticks. And then we came down, bounced down here. This is the overnight low at 40.83.5. And we failed right there off the 38% retracement to the tick or within a tick or two and right off of our VWAP. So this is what happened here. If I could draw it nice and visually here, the high of the overnight session, bam, down, bounced, and look at what happened. Failed right at the 38, almost to the tick, got a pullback, and now we're right into the 50%. So what I did, actually, what happened here is the 61.8 happens to be our minor eye level to the tick. So we don't really need the drawing on there anymore since we've already tested the 38 to the tick, pulled back and came right into the 50. Coming into the open, just be aware that our minor level happens to also be that 38% retracement. And a lot of things kind of line up. If you look at this major swing from yesterday, that's also just about the 50% retracement of the overnight leg. And that's exactly right now where we're failing from. So some really nice confluence as far as those retracement levels go, and good confluence here with our minor eye level. So there is that minor leg, which happens to basically be done with now, and we have our one level there. The other retracement you guys know I like to look at is when we get a really nice push down or a push up, depending on the orientation. I like to look at that whole push down and consider the retracement leg. So it happens to be that this morning, the 38% retracement of this sell-off here happens to be our minor eye level, 41.07.5. The 50%, I went ahead and marked here at 41.15.5. And then the 61.8 happens to be our next minor eye level to the tick at 41.23. So if I get rid of that fib leg, you can see all these are basically mapped out on the chart. We've got that little pocket there, 50% of the day before, and the minor eye level, which is also a retracement level and all that, right? So decent little pocket right there. And that kind of covers this immediate area here. So if the bulls get through the little shaded area here that I just marked, and we can get up through 07.5, there's a potential that we could fail right here around 41.15.5. Right here around 41.22 to 41.23, and then from there it's right back up into all the levels up above us that we've been talking about for weeks on end here. So all the major and minor eye levels above you should be aware of, and then again we have our major retracement up there at 42.21. All these levels are going to be potential trouble for the bulls if they do break out through yesterday's high. And remember, yesterday's high has a huge confluence of bearish signals. So the expectation ever since we made the high of yesterday was for a pullback. The question's going to be, is the pullback only down to the low of the overnight session, or are the bears going to remain in power here and start to continue selling off down through the overnight low? If that happens, we need to look at what we're dealing with below us. So I'm going to go up to the 60-minute chart so we get a little bit higher perspective, and we'll talk about all those levels down below us that could end up acting as support as the bears sell this sucker off. So 40.81, again, we came down and tagged our major level to the tick on Friday and bounced right off of it to the tick, and that's what led to that bullish rally going into the end of the week. So coming back down, it's still sitting there. Remember, it was pretty good resistance back, I believe, Thursday. We pulled back. We failed. That was the high of Thursday, I believe. And then we pulled back and broke through it. And then we pulled back and used it as support here back on Friday. So coming back down, you never know, that could act as a support. And remember, it doesn't matter that basically the low of the overnight session was a couple points away. We see these stair-step patterns where things will come down to balance and then just come down a little bit further into a level and go ahead and get a much more appreciable bounce out. So don't ignore that that's sitting there. And then we have the retracement levels that I want to talk about. So we've got, remember I talked about this, I think at least for a few days here now. We've got the first leg up. If you zoom all the way out and look at all these kind of legs in the market, or waves in the market, if you're an Elliott wave kind of guy, we have this first impulse up from 39.13 quarter all the way up, and look at that, it failed right off of our minor eye level here at 40.42, pulled back, and then we got this bounce right around 39.97 to continue going the next impulsive move up. So we've got two legs here. Leg one, pull back, leg two, up to the high of yesterday. So we've got this leg here from the low of July 28th all the way up to the major high we've made now. And you can see we've got 40.88 half, 40.70 half, and 40.52 half. Those are the three retracements of the smaller leg. And then we have the entire thing. So the entire thing gives us, let's see if I can draw it almost exact here, gives us 40.57 half, 40.30 quarter, and 4,002 half. So those are the 6 major retracement levels that you want to be aware of if this does continue to pull back. And then we have a couple of those swings that I've been mentioning. So the first swing there at about 40.58 half. What's the high? Yeah, 40.58. We've got the major swing back here, which is our minor level at 40.42. And then a little bit further down, oh, that's right. So we have this swing here, remember, 40.16, 40.15, 75. All these should sound familiar if you've been here even just yesterday. And then we have the other major swing at 4,006. A little bit deeper than that, it just so happens that 39.88 half and 39.84, these two areas, are also some pretty significant major swings going back about a week ago. So 39.88 half was a really significant area where we pushed into, again, right into a minor level, and then got a significant pullback. And then this 39.84, the major level, we also came into. It was the high of the morning there on the July 27th, got a good pullback, and then the bulls ripped through it. So those two levels are close together, but they both make sense. And then outside of that, it's all just the major and minor eye levels we talk about every morning and should be on your chart. So just to summarize everything, put it all together here, pretty good multiple time frame signal from the overnight low that could lead to an attempt by the bulls to break out to the upside here. And then we have all our levels here to consider as potential resistance. And then off the overnight high, a much stronger bearish divergence compared with the overnight low. So it's going to be important if there's going to be any type of bullish breakout to get through that level up there, the high of yesterday. And we see this all the time, a really significant signal, and then they come up and either fail right at it, right below it, or they get a little kiss through and then fail. So this morning, it would not be surprising for them to come back up here and maybe even peek through and then fail again. You have to be aware there's so many different scenarios that can happen. Nobody really knows exactly what is going to happen, but we know the areas of the most probable, we know the most probable areas where it should turn. And that's all we can do. That's the best we can do as discretionary traders. So that should wrap things up coming into the open. The market is going to open here in probably less than a minute or a minute and 15 seconds now. So enjoy, have a great morning, and we'll see you back here tomorrow.